Hey guys, are you hearing from my microphone, or is it coming from the
No,
computer?
you sound amazing. You have the most incredible radio voice. I don't know if it's your microphone or just your
It's all
radio
the mic,
voice.
dude. Dude, it's all the mic.
All right, we are live here for Swan Signal Live. You know, I love these prime time editions. They're just a lot of fun. Uh, Thank you all for joining us today. So we got a great show here with Preston and Mark. We're going to dive into the latest news and just see where it goes from there. Before we do, I'm going to update you on Swan. Swan Bitcoin is the producer of this podcast. It's the safest. It's the safest and easiest. I kind of like that, actually. The safest way to accumulate Bitcoin with automatic recurring buys. We have now launching an ability to buy right away. Now, automatic stacking is the safest way, as I mentioned, to stack sats. Just set up something at regular income and stack on a daily, weekly basis. However, sometimes you just want to buy now. We get that. We've heard you. So we're launching buy now. The first cohort of beta testers will be rolling out this week. So we'll bring in slowly, 50, 60, 100 people at a time, test that buy now button. You can get into that group if you want, swanbitcoin.com/buy now. We have this emerging narrative of Bitcoin as a corporate reserve asset. We're going to talk about that again tonight with the Microstrategy news. Swan has recently launched Swan Treasury to meet this demand and serve this extending narrative. So you can learn more about that at swanbitcoin.com/treasury. However big or small your company is, we'd love to help you convert some of that melting cash into hard Bitcoin. And finally, Bitcoin Magazine has compiled a list of the 21 companies and projects they think have done the most for Bitcoin in 2020. That list included Swan. We're honored to be on that list with a lot of other trailblazing companies in this industry. Thanks to Bitcoin Magazine and BTC Media for the shout out. Okay, let's dive into this one. We're with Preston Pysh. You all know him. He is the co-founder of the Investors Podcast Network. He's recently started a Bitcoin Focus podcast, which is awesome, airing on Wednesdays, dropping on Wednesdays. And Mark Moss, he is a finance and investing YouTuber. You can find his work at youtube.com/Mark Moss. It's high quality. I definitely recommend it. Head over there and subscribe. Turn on those notifications. Mark's dropping high quality stuff in finance and investing, and there's a lot of Bitcoin content in there as well. So check that out. Okay, let's dive into this one. Microstrategy, Giga Chad dropping another bomb. He just can't get enough, guys. Just can't get enough of this Bitcoin. Launching what you might call as a speculative attack. Pierre Rochard wrote this article, a Prescient article, thinking about how this might play out. He wrote it in 2014, actually the 4th of July, 2014. You can find it at nakamotoinstitute.org. And he describes a speculative attack, the idea that you take out debt in US dollars to buy Bitcoin. And this is a way to kind of initiate a run against the dollar and really just crush it with just the weight of being better money. Tyr's law, good money, better money drives out the bad money. Preston, this is a big move, man. And it's different in nature fundamentally than what they have already done, putting equity and cash into on the balance sheet, Bitcoin on the balance sheet. This is something completely different here, I think. Tell me what you think about it.
I think it makes total sense. I'm interested to see how Wall Street reacts to the issuance of the note. Because it hasn't gone out yet. So we're going to see how well it's received. I'm kind of curious what % interest rate they're able to issue it at. In the little bit that I read, it seems like MicroStrategy has the ability to either convert it into common stock, or they can just pay it off. So it's going to be interesting to see how they do this. I don't see this as being anything that a normal person who understands how business is done this should be acting. And I bet you if you look at a lot of private companies that have a majority of voting rights, that have Bitcoiners at the helm of the company, you're going to see something very similar. This is really unique because you're dealing with a publicly traded company. Now, this particular publicly traded company has a person who understands Bitcoin, who controls the voting rights, and he's able to do the stuff that I think other people at a much smaller scale are naturally doing. for a person who runs a business who has a debt to equity, I think MicroStrategy's debt to equity at the end of last year was like 0.2. I want to say this past quarter, it was probably a 0.25 debt to equity. That's a really low debt to equity ratio for a business. And so when you try to optimize your returns on your income statement, you want to have some type of debt there because of the way that your taxes are done and how you pay off your debt each month as far as your interest payments and how that reduces your debt burden. It's really smart to probably have around a 0.5 debt to equity ratio because you're just optimizing your earnings. So whenever I look at a company like MicroStrategy that's extremely conservative in how they've managed debt historically,
Mm-hmm.
and you look at the opportunity that he sees in Bitcoin, and he's just going to go to market. He's going to issue some notes, convertible notes. I'd be really surprised if he would convert these into stock. I mean, it's going to depend where he's at 3 years from now, because that's whenever he can start, getting into the note in more detail of whether he wants to start letting it run. He'll probably let it run clear out to the 5-year mark, I suspect, based on the way that we all suspect the price is going to run on Bitcoin. So he probably won't start converting and choosing how he's going to pay these people back. But it's going to be really interesting if the market penalizes his company, or if the market doesn't keep the stock price moving at the same pace as Bitcoin. Well, then maybe he'll pay him back in stock. But if it keeps running as fast as Bitcoin, maybe he'll pay them back in cash. It really depends on what the situation is as he gets closer to the maturity of the note. But yeah, I see this as just being really quite obvious for a person who understands it. Now, what's really fascinating is the price starts to run. Let's just say, my expectation is by September, August timeframe, you might be, John might be firing up his 100K party DJ list and getting everybody ready, right around that time frame. So that's 5x from where we are now. And if true, what's really fascinating for MicroStrategy is what their balance sheet looks like. And now he's in a position where his debt to equity is back down to probably a 0.2 again, right? So now he can go to market again and issue more debt. That's why I'm saying, let's see how this shakes out. I think it's hitting the market here in like a week or two or something like that. So let's see what interest rate it comes in at. Let's see how subscribed the issuance will be. And then from there, I mean, it's going to be fascinating to watch what happens in a year from now, because I see him hitting the copy and paste button on this idea. And I think that you're going to start to see maybe some others do something similar. You have to be in great debt condition for the company to be doing this. If I was going to tell you what this is like for a person on the individual level, this is like a person with $1 million in their bank account, right? And they don't have any credit card debt. They don't have any house payment. They don't have any. That's what we're dealing with here with MicroStrategy. That's why they're able to do this.
Except for they put that $1 million into Bitcoin. Right? They already leveraged their whole treasury, but yeah.
Well, but think about it. So they put that money into Bitcoin, but it's not like that's a liability, right? It's not like he doesn't need that money. His company's still kicking off $30 million a year in free cash flows. So, and that was, that's what was interesting about the CNBC interview. I don't know her name, but do you know her? Does anybody know her name so we can? But whoever she was, it was interviewing him on CNBC. And she's like, are you a hedge fund company or a crypto hedge fund, or are you a software company? And I'm thinking, my God, you have no idea what you're even asking this guy. This dude is making $30 million a year, does not care whether his Bitcoin position goes to zero, because guess what? He's still making another 30 million the next year. Now, of course, he doesn't want to see it go down, but it's not like he's going to lose all of his clients in a hedge fund because he has this insane amount of volatility. That was a Wall Street, I work at a hedge fund question, and I've never run a real business in my entire life and created a shred of value for the population kind of question. Because only a person who manages other people's money would ask a question like that, because they're worried about volatility and their clients taking their money away. But for somebody who runs a business and creates value, they could care less if there's a lot of volatility. He banked it on his balance sheet.
Melissa Lee is the interviewer's name. Thanks.
There you go.
Thanks to the chat. We've got 380 people watching right now. A lot of you are watching on YouTube. Please smash that like button. It does help get this video out in front of more people in the algo, in the feed. And it makes a big difference. Let's get that Bitcoin talk out there, the good Bitcoin education. Mark, let's turn it over to you, man. Can you start by just kind of talking through the logistics? If, somebody who doesn't know much about finance and how this, played out, or exactly what MicroStrategy is doing, can you just kind of give us the talk to me like I'm five basics on what they've done here?
Yeah, well, he's basically discovered Bitcoin. I think he educated his board on Bitcoin, got everybody on board, and he went all in. I mean, I got to love the conviction. So, from the beginning, I mean, he took his treasury. So as Preston made the case, he's just gushing cash flow. Accumulating a ton of cash flow, and he called it like a melting ice cube. He didn't want to sit on that cash. So he went ahead and put all of that into Bitcoin. I believe, what happens is once you get a little bit of skin in the game, you just start going down the rabbit hole, which he appears to have done, and he wants to go in deeper. And now, it appears that he's raising money to go buy more. At this point, we're kind of speculating on what is going to happen with that. There's definitely a lot of questions to be asked. I mean, he's blazing a trail at this point. Sometimes the pioneers get an arrow in the back, so we have to be careful here. But it is interesting, since he put his treasury into Bitcoin, we've seen the price of the stock go up. Obviously, the price of the Bitcoin has gone way up because he got in. I forget exactly what price it was, but it's gone up considerably in US dollar value since he bought in. So the stock has done very well. Yeah, Brecky says about 11,000. So he's almost doubled that position. It was about $500 million. And so now he's sitting on about $1 billion. So it worked out really well. The stock was rewarded. What was interesting, I thought, was now their stock has been downgraded and they took a massive hit. And so that's kind of interesting, and we'll see how that plays out. Another thing that I also think is interesting is that, as being a public company, he does have a fiduciary duty. And not everybody believes in Bitcoin, has the same conviction as we do here, obviously, as he does, putting his money where his mouth is. So I think that's definitely an interesting thing to see how that plays out. I love what Preston said about, the debt to equity ratio. So for sure, we're in a debt-based economy. And so you're rewarded for taking on debt. You can acquire that debt. It's not income. You're not paying tax on it. And as a matter of fact, it's even a tax write-off in most cases. And if this pays off, if Bitcoin does what we think it does and it goes up in value next year, then he brings that debt to the debt to equity ratio way back down again. As far as what he's doing, I guess, kind of to answer your question, I'm not exactly sure. I mean, I see people speculating for different things. Is he trying to create like a Bitcoin ETF, kind of in a roundabout way? And basically to explain that, right? It's an ETF, an exchange traded fund, would be an easy way that somebody could buy into Bitcoin through a stock. So somebody that may have like a 401k, IRA, something like that, that cannot buy Bitcoin directly, but still wants to get access to the price without having to store it, they could buy it through an ETF. In the Bitcoin space, we don't have one yet. The regulators have not allowed us to do that. And so some people are speculating maybe that's what he's trying to do. If he continues to acquire all of this Bitcoin, I could just buy the stock, and I could do that through my 401k or some other type of a retirement account and get access to the Bitcoin price. I'm not sure if we know exactly what he's doing other than the speculation, but it's definitely interesting. I would say kind of Preston gave the example of if it was like a person and you had $1 million in the bank. This is a business. It's a publicly traded business. I would typically tell people to never borrow money to go buy a speculative asset. But of course, another point that Preston brought up, he is gushing cash flow. So understanding risk, managing risk is definitely a nuanced argument. And somebody that has a high level of sophistication, especially somebody who is making a high level of income, can afford to be a little bit more risky. So even if the volatility goes down and it's down for a while, he doesn't really need that. He's got plenty of cash flow coming in. And so as a Bitcoin believer and believing where it's going, I think it's a great move. I'm super interested to see where it goes, and we'll have to watch and see.
Yeah, totally. Preston, can you just describe what a convertible debt note is for the audience?
Yeah, so you issue some notes. It's similar to a bond. They call it a note because the duration is 5 years. And all he does is he goes out into the public market. He says, hey, I'm going to issue you a bond at whatever percent. Let's just say it's, for simplicity, we'll just say it's 5%. So he'll pay 2.5% 2 times a year for up until the 5 years. And then at the end of the 5 years, he either has to pay back the $400 million is what I think he's going after. He has to pay back the $400 million at the end of the 5 years. If he elects to pay it off earlier, he can do that. And if he wants to, he can convert that into common stock instead of paying it back in cash. The way that it was written up, he has the option as MicroStrategy to convert them into common stock or to pay them back with cash. And that's it.
Makes sense. And so let's get back to this idea of a speculative attack on Bitcoin. This is the way Pierre describes it in this article on Nakamoto Institute, right? He says that a slow bleed of the fiat value, basically, which is what we're seeing right now, and it's actually getting quite a bit faster. I'm not sure you can categorize it as slow anymore. It leads to currency crisis. The expected value of Bitcoins solidifies in people's minds. At first, they are conservative. They invest what they can afford to lose. After 12 to 18 months, their small stash of Bitcoins has dramatically increased in value. They see no reason why this long-term trend should reverse. The fundamentals have improved, yet adoption still remains low. Confidence increases. They buy more Bitcoins. They rationalize, well, it's only 1 to 5% of my investments. They go all in. And then the next step is to start taking out debt in the worst money, the money that's losing value, and then and buy Bitcoin. And that drives basically the Bitcoin value up and the value of the fiat relative to the Bitcoin down, and speeds up the transition from the bad money to the good money. So I see this as Saylor having kicked off a couple of really important trends that we'll see how fast either of them continue. But first, obviously, the corporate treasury narrative and idea just to convert over to your cash on hand over to Bitcoin, but then also to take out debt to buy more Bitcoin. So he's setting that trend as well. And I would imagine the latter would take slower to take hold and would be less popular among publicly traded companies, especially. But it is. He's trailblazing on both fronts here.
I think he's just being smart.
Yeah.
I just see this as being like really obvious.
Yeah.
It's and I don't see it as being risky at all. Like not even in the least bit. So if you're kicking off $30 million a year, right? 10 years you can come up with $300 million. Right? That's how it's just basic math. So if he's borrowing 400, so he's a little over a 10-year payback, right? He's sitting on, so his Bitcoin position back when it was 10,000 or 11,000 was $450 million or somewhere around in that ballpark, right? It's nearly doubled at this point. So let's just say it's close to $800 million. He's sitting in Bitcoin right now. So as long as he still stays positive in his principle of that investment, he can pay back this loan that he's borrowing one for one, literally right away. There's no concern of him doing that, and his company's still kicking off $30 million a year. So he's just leveraging the opportunity that he was able to literally double his retained earnings. The 30 years it spent him to make his retained earnings of $400 million that he doubled in 2 months.
Yep.
Right. That's what happened. 30 years of work. He doubled it in 2 months. Now he's going to go out and borrow some money against it. He can pay it back. He's not being irresponsible, right? He can pay that back. That's why I guess I'm just saying, I'm really curious how well subscribed the issuance is going to be, because although I completely get what he's doing, I'm kind of curious how Wall Street's going to receive it and what interest rate they think they're going to be able to step into the market, especially because he's coming out and saying, I'm buying Bitcoin with it. There's no surprises. There's nothing. So it's just going to be interesting to see what the terms of the deal is.
Yeah.
What's interesting is, as Preston said, there's really no risk there, and so he's taking on debt to do this. So really, it's the people that buy into that. We'll see what happens with the issuance, but they're the ones that are really taking the risk somewhat. If for some reason we hit a downward trend in the volatility, whatever, and he doesn't pay it back, he can just roll it into stock. So I love this point. Because
so many people don't understand why Warren Buffett owns a company. Why didn't Warren Buffett go work on Wall Street and have a hedge fund like everybody else, right? Why did he own a business? So if I'm Michael Saylor, right, and the market wants to penalize me for this, and they want to crush my stock price, have at it. Because guess what I'm going to do? I'm going to go out and buy long call options on my own stock, right? And then I'll like, dude, there's so many things that you can do when the market misprices what it is you're doing behind the scenes, like what Mark's describing right there. You just murder it.
Yeah, and when you can borrow, I mean, we'll see what he gets at. Like you said, we'll see what the street prices it at. But I mean, a couple percent, I mean, it's free money. It's free money at this point. He's already, I mean, his profit margins are more than enough to pay off that note if he needs to. At the end of the day, if he doesn't want to, change his mind, can't, whatever, he rolls it into stock. I mean, there's really almost no risk and kind of all upside for him at this point.
Totally agree.
Yeah. So
now,
I mean,
I guess the only risk I would see is I would imagine not all the shareholders may share his same enthusiastic view potentially, and he could potentially maybe well, for as many people as he might scare away, he's probably attracting more. So maybe not, I guess. So that's probably very low risk. It's a very low risk all upside trade, I think.
And so when I look at this, I look at it with just like a twinkle in my eye, because what I'm thinking is that's why he controls all the voting rights. If you don't like it, get the hell out. Yeah. Okay. And then when you sell your shares, I will be standing there ready to buy them with open arms and levered in options. So like he can take advantage of the people who don't understand what he's doing. And boy, let me tell you, it's going to be juicy. That's the advantage of doing this through a company vehicle opposed to a hedge fund vehicle, is because in a hedge fund vehicle, everybody gives you the money at the wrong time. When you're booming, they want to give you more and everything's overvalued and you can't buy it. When it's undervalued and things stink, they're taking money away from you. When you own a company in a business, you get to play on those emotions and lever it to your advantage. And that's exactly what he's going to do right here.
And kind of to your point earlier about Warren Buffett, right? If they drive the price of the stock down, you can do some levered calls against that. And so if you're rubbing some of your investors the wrong way, they're wanting to get out, brings the price of the stock down. You've just doubled your net worth on Bitcoin. You could buy your company back.
That's right.
And now you own all the Bitcoin.
That's right. He's collecting equity. He's stacking Bitcoins. If you don't understand, come here, give me your shares. Give me your shares. I'll buy them from you.
Yep.
Right? You want to penalize me in the marketplace? Please. I beg you. Right? It's ridiculous.
And we saw a penalty today. The downgrade from the city analyst, and we saw a 13-point drop last time I looked in the afternoon. And the stock price, of course, MSTR is still up 110% on the year. But I mean, that initial reaction that we were looking for, we got a hint of it today. And as Preston's saying, like, that just seems ridiculous, right?
It kind of depends on what game he's playing too. Obviously, he's really into Bitcoin and it seems like he's playing the long game. And so if he doesn't really care about the short-term price of his stock, then sure, send it down. I'll buy more, right? So, and it seems like that's the case for him. He's not really right. A lot of CEOs we've seen, especially like going into the pandemic, we're doing all types of tricks, stock buybacks to push the price of the stock up so they can get those big bonuses. But that doesn't, he doesn't seem to be worried about that. So he's playing a totally different game than most of the CEOs on Wall Street are playing.
That's because most of the CEOs on Wall Street don't own
right
the majority of the company. They're working for a bonus, like you described. And so they're trying to juice the quarterly results. When you own the equity of the business, you hope the market is penalizing the price lower, because then you can buy more stock. The only time the company makes money on the stock is when they issue it and try to raise funds, right?
Right.
So like, I don't know. I'm just looking at this and I'm just like in total admiration of Michael, because I guess I'm looking at where he's at in his life. He's way, he's a lot older than where I'm at. I know what I'm doing with my business and how I play. It's not on a public market, but I'd be looking at this and being like, oh my God, please sell it. Please sell it. I want to buy it from you. Right.
Yeah.
It's awesome.
Yeah.
Yeah. It's amazing. The vision, the conviction is going to prove to be just an absolutely amazing move, a legendary move in the 10 years from now. I have no doubt. And it's interesting. Somebody on Twitter asked how you would price MicroStrategy now, the stock, right? And Mark was kind of alluding to that too, is MSTR becoming a bit of a de facto ETF for Bitcoin, and the numbers sort of bear that out. If the treasury has doubled in value roughly and stocks up 110%, sort of seems to bear out that people are valuing this based on the Bitcoin price at this point. Is that how you would you agree with that valuation kind of method, Mark?
Well, I mean, there's obviously several different ways to value a company, but you could add up all their assets, right, minus their debt, and come up with a valuation. And so anytime you can buy a company at market, their market cap is less than the assets they have, that's always a good deal. And so now their treasury assets have doubled, which means their company is worth more, which means now the stock is undervalued. So I would say that's definitely a good way that you can look at that. And I'm sure that had something to do with it. Obviously, it's got massive PR going as well, which never hurts a stock as well. So lots more eyeballs coming in. I think I don't know. I haven't seen any data that really shows anybody how much, or if anybody, or how many people may have been using it for an ETF. I don't know if any of you guys have seen any data on some mutual funds, 401ks, et cetera, buying that stock. But for sure, like I said, when you can take the total assets, the net assets, for less than the market cap, I mean, it's a good deal.
Yeah. I think that's absolutely on point. Preston, I love the analysis that, there's no risk here. The chat absolutely agrees with you, and they're all blown away that, this is such a obvious move. I would imagine that he saw this play months and months ago. Andy Edstrom and Preston had a show a few months ago, back in August, where they called this. They came out with the Treasury, and Andy was like, look, they're throwing off cash. They can afford to take out some debt and buy more Bitcoin. I wouldn't be surprised if that happened. So it was a great call.
Per kind of the move that he's making is, one thing that's interesting is, I get thousands and thousands of comments on these videos that talking about YouTube. On my YouTube channel about Bitcoin. And, I see a couple, the same old arguments kind of over and over. And one comment that I see quite often is, why doesn't the federal government just print, or the Fed just come up with $1 trillion of debt and go buy all the Bitcoin as well? And so kind of taking that, and it's kind of what Saylor's doing, taking some debt, going to buy Bitcoin. The Fed could do that as well. We obviously talked about Richard's PR's comments. The one thing that I always have countered that with is, sure, obviously they can print a couple $1 trillion. They just did it. But how many of the strong hands, true believers, are going to give up their Bitcoin? So then it's kind of interesting talking about that speculative attack, or what Saylor's strategy is. Like, how far can he go? At what point are we really going to start running out of the weak hands?
This is a great point. Something I've been talking about lately, that we're entering a cycle where the narrative of Bitcoin as a store of value has become much more widespread, much more trusted. You see it on CNBC just about every day, big investors talking about it, that this is a store of value. Even Ray Dalio is coming around. We're going to talk about that here in just a little bit, that Bitcoin may be an alternative store of value to gold. And that's taking hold. So if that's the case, then bigger investors who are experienced and understand these sound monies, as with the fixed or reliable issuance rates, inflation rate, are a hedge against a very uncertain monetary future in this world. At least you're talking 5-10 years from now. I think we're pretty certain what's going to happen the next year or so. But who knows how long that can continue? And it makes sense to have that hedge, and you have to hold it long term, right? In order for that speculation as a hedge against the dollar and against inflation, you got to hold it for the long term. So, these are big experienced investors. They know what they're getting into. They're not, I don't think, going to be buying it in order to flip it, when we hit a blow off top. Now, I also think that retail and just, normies, plebs, like myself, like us here, are going to be buying and holding too. That narrative is spread. So I think we're going to have stronger hands this time around, a lot more stronger hands. That floor is going to raise. What do you guys think about that? I'm calling it the hodl FOMO cycle, because people are going to just like FOMO into this idea of hodling. Like they're going to get it. We're out there in force educating about this, and it seems to be spreading. What do you think, Preston?
I think you got it. When you get institutional buyers, when you get corporations putting this on their balance sheet, they're going to be a lot different than the way people held this in the previous cycles, which were a lot of traders.
Yep.
I mean, I feel like I have a very company focus mindset with the way that I buy it. Man, I just buy it and I don't ever try to put it back on the market and time the sell and repurchase. Like I just buy it and put it on my balance sheet and it just stays there.
Yeah.
And that's what you see Michael doing. I think anybody that has a large capitalized company, they're not going to be like trying to trade this. I mean, that's just laughable. And so in this cycle, you have people stepping in with substantial sums of money that are wanting exposure to protect themselves they're trying to protect themselves against debasement. That's just the bottom line. That's why they're holding the position. So they're not there to trade it. They're not there to make an extra couple percent. And I just think that it's going to be drastically different on this, on this bull run.
Yeah, I agree completely.
Yeah, I would say the same. I mean, we can see how different this run we're having right now, 2020 as versus 2017. One of the best ways to look at it is just in the Google Trend search data, Google Trend data. Last time I looked, we were like around where we were like in May of 2017 with about 3 to 5 million searches when Bitcoin was about $1,000. At the height of that in December 2017, we were like 45 million searches. So we're a long way from that. And I think that's a good data-driven way to look at it. Just as a side note, I mean, I was talking to one of my media guys that's down the Cayman Islands today, and he kind of pays attention. And he's like, I've been looking and searching, and I don't really see a lot of people talking about it. He's like, it doesn't seem like on YouTube and stuff, it's getting the hype that it used to get. And that kind of shows that we had the retail FOMO in 2017, and now it's the institutional FOMO. And for sure, they are different. I think obviously as the market cap gets bigger, I think the volatility goes down, but the makeup of the person buying the volatility goes down. So when you had that retail FOMO, the traders that are in there, but obviously some of those people probably put in money and they can't afford to risk, right? And they need that money. It drops in value, whatnot. Now we have these people that, types of investors that have that long-term approach. They're not putting in money they can't afford to let sit there for a long period of time. So I think we'll see volatility come down, and I think we're going to really see a shift here.
Brady, I would add, I think the reason that you're not hearing the buzz, like if you go do a Google search for Bitcoin and you look at the numbers relative to where we were at in 2017, it's nowhere near the hype that you had back then. The reason why is because in the 2017 cycle, you were hitting 20,000 and it came from $200. Okay. The bottom of that cycle was $200. So when you look at 100x move percentage wise, it's going to have a lot of hoopla on the internet. This cycle, we got down to like 3,000, right? So for us to be at another 100x move, we got to be at $300,000 Bitcoin. Let me tell you, if we're at $300,000 Bitcoin, everyone and their kid's sister on the internet is going to be talking about Bitcoin.
Yeah.
Right. We're nowhere near that right now. We're not even close.
Yeah. I was trying to pull up this chart and having trouble doing it. I'll see if I can get it up in a minute, but I can just describe it. It's the balance of Bitcoin on exchanges is just plummeting over this, the past year and a half. And compared to the previous cycle, it's, significantly longer and significantly more Bitcoin being pulled off exchanges. And it's absolutely noticeable. So that piece of data combined with, we're not really seeing the search volume yet on Google to really explain this price rise, it says everything you need to know from, if you want the data to prove out this hypothesis, there it is. There's a lot more, Bitcoin being bought and then taken off for long-term cold storage, presumably.
Definitely. I think that was one of Saylor's comments. He was interviewed, was it BTC Magazine or somebody? And made a couple comments, and one was, kind of got to get rid of these traders, the traders that are constantly like pushing the market up and down, up and down, up and down. And so, well, like I said, I think we'll see that volatility start to slow down a little bit.
Yeah, I mean, and that's, Bitcoin's a very liquid asset. There's, roughly 3 million Bitcoin out there in any given day, that's kind of changing hands and available liquidity pool for purchase. And the thing to me that would really make a big difference in terms of price would be to whittle away even, 10%, 15% at that historic availability of Bitcoin on any given day. Then you really see, the squeeze on supply and push the price up quite a bit. So that's what I'm going to be looking for over the next year or two. So go ahead if somebody else, sorry, I think I cut somebody off. No. Okay. So let's move on to talking about some other news that's been out there in the ether, the Bitcoin. I don't want to say Bitcoin ether. Why did I say that? That's a strange way to put it, strange combination. The Bitcoin, just in the atmosphere, let's call it. The Treasury has recently had a meeting and talking about, the overarching thing here is that we're seeing countries start to talk more about how to approach Bitcoin from a regulatory standpoint. So there's been lots of talk and various kind of ends of sort of, pro-regulation or anti-regulation. We've seen the acting director of the Office of the Comptroller of the Currency was on CNBC late last week, I believe, and talking about how there's, no one's talking or thinking about banning Bitcoin. We need to sort of, embrace it as a technology and learn how to regulate it in a way that will allow, the technology to flourish here in the United States. I think the argument that, the internet, the United States sort of approached the emerging technology of the internet in a way that was sort of kind of standoffish in terms of regulation. And look how it's benefited this country. We have the biggest, internet companies in the world, all located here in the United States. I think selling Bitcoin to regulators in a similar way is going to make sense. We see, increased KYC regulations coming in France, talking about issuing a decree to basically make every exchange like ramp up on KYC, including the peer-to-peer exchanges, which would be like, like HODL or BISC style, or how local Bitcoins used to operate, citing, and this is the important part, I think, terrorism as the reason, right? And so the politics of fear, I think, could be used to regulate Bitcoin in a way that's could be negatively affect the network, kind of set it back or whatever for a year or 2 or 3 years, whatever, kind of slow things down. We see some of that talk also from incoming members of the Biden administration. So what do you guys think on like the regulatory environment surrounding Bitcoin right now? Where do you think things are going to go in the next year or two? Preston, you want to kick that one off?
Oh, I was hoping you were going to say Mark.
Mark, you want to kick that one off?
I'll jump if you want. I think, you really set the stage pretty good there. I think of it in two ways. So one, at least in the United States, and I would imagine in most of the world, the politicians are lobbied, right? So we have special interest groups that lobby and get their will. A lot of the bills that get put forth aren't written by lawmakers, but they're written by lobby groups. And one of the largest groups of people lobbying the government is the financial institutions, right? The financial industry. And what I've seen is that there's all these financial institutions have come into Bitcoin. They've built Bitcoin products and all these things. They all want in. They've spent, I would imagine collectively billions of dollars to get into the Bitcoin space already. And so I can't imagine that they would just sit back and watch it be made illegal, right? They're going to do everything they can. So I think we have enough people on the side of Bitcoin that would prevent it from going illegal. So I think really the route is, as you were kind of setting the stage for, really it's all about regulation of it. And then we have to think about what kind of regulations that are and how much regulation they can really put into it. KYC on exchanges, I guess, okay, whatever. I mean, they already have our KYC on bank accounts. I'm not so worried about the KYC. They know I have it. I report it on my taxes anyway, but they can't take it from me. So that is the point that I start getting worried about when they start talking about regulating nodes. They start talking about regulating wallets and things like that. And that is where I believe we start to have a problem. And I haven't really seen a lot of that right now. But they know I have it. I'm reporting it anyway. Sure, I can claim it in a boating accident or whatever, but they know I have it. But regulating the wallets, regulating the nodes. I think in that bill you're talking about, they were talking about stable coins, but I think they even said like even running a node on a network could make you liable, which seems completely ridiculous. So we'll kind of have, if they can regulate buying it and they know who has it, okay, one thing. But if they can regulate how you can hold it and how you can transfer it, then that is going to be a problem that we have. Now, that being said, like the financial industry, I think would prevent it from being shut down. That being said, I think we all understand the battle that Bitcoin has. And so all the power really comes back down to who has control of the money. As Mayor Rothschild said, right? I care not who makes the nation's laws as long as I control the money, or something like that. And so really it's all the power of the world comes to who controls the money. And this goes into another conversation, but how the IMF's calling for Bretton Woods 2. And really we're seeing like all the money trying to be consolidated, maybe this takeover of the bankers. And so Bitcoin threatens that. Bitcoin is the challenger. And so ultimately at some point we're heading for the ultimate battle. And so I do understand the challenge that it has in front of it at some point. I know, some people say, well, we won't have that battle. I think Raoul Pal said, maybe when we get to 10 trillion, they'll worry about it. But at some point that battle is going to come to a head. But for now, hopefully, I don't think they're going to be making it illegal. They're saying they're not going to make it illegal. And hopefully we don't get regulations on the wallets and things like that.
Yeah, the big negative would be making self-custody illegal. That's the one that I think Bitcoiners are really worried about, right? And the idea that Bitcoin is not necessary, like the privacy aspects of Bitcoin aren't necessary, and that we just need to play. This is one thing that I was, disagreeing with Saylor about a couple of things. One was, we don't really need to worry about using Bitcoin as a medium of exchange. It's just a store of value, should be that way, forever. And, and I was responding like, look, we need to have the Lightning Network. We need to have a place to kind of opt out of the payments panopticon. That's really important. That's a part of Bitcoin that we should really hold dear, is its ability to provide more privacy and just be kind of self-sovereign payments. And then the other one that we should, we really just need to kind of play nice with all the regulators. And, I get his argument. I know where he's coming from. He's made a huge investment. He's a public company. Everything that he does has to be completely disclosed. And all the laws for all of us holding it mean that we have to disclose it as well. But when it comes to making self-custody illegal, for instance, I think Saylor would even agree that is, a bridge too far. So yeah. I think we, at that point, have to fight,
I didn't like those comments. Several of those comments that were made were kind of rubbed me the wrong way a little bit, because if you understand, again, what the battle that Bitcoin is heading to fight and why it's important, I don't see how you can make those statements. Specifically, he said you have to stop talking about being censorship resistant. But that's kind of that's the whole point, right? We need a money that's sovereign, that can't be taken, can't be seized, and we need a money that we can send to people that can't be stopped, blocked, or prevented. That's the revolution. That's the whole revolution. It's not just another asset that can make us money. Obviously, some people are coming in for the money today, but obviously a lot of old Bitcoiners have that ideology. And so he said, yeah, stop talking about censorship resistant. Nobody wants to know about that. And I think that's what the ethos, we need to continue to push that. So we'll see what happens.
I think it's really hard to speculate on exactly what's going to happen in which country and when. But what I would like to discuss is the long game theory of all of this, which is a law is only as good as the enforcement that accompanies it. So we can come up with as many laws as we want, restricting nodes, self-custody, whatever, right? But you can't enforce it because the technology is too powerful, and with the encryption behind it just does not enable that, right? You can't enforce either one of those two things, regulating the nodes or regulating the self-custody portion of it. So what's going to happen in the long-term game theory is that there's going to be countries that don't take that position, and they're going to benefit tremendously from it. Now, let's say a country comes out and starts to regulate it in an aggressive way in either one of those two fronts, what's going to happen? And especially if it's a country like the United States or a country that has a lot of fiat behind it, you're going to see the price take a massive hit in the short term. I don't know how it could happen any other way. Will it last? I don't think it'll last. And the reason I don't think it'll last is because I think when you dig into how the number go up technology works, and this is getting into the difficulty adjustment, the 4 you're having, how it's tied to, in my opinion, the miners are setting the floor on the price action. As long as the hash rate keeps going up, all of those kind of things are going to continue to drive the price higher and higher and higher. I think that is why you're going to see the countries who don't overregulate it are going to continue to benefit from it. Their citizens will continue to benefit from it. And I think the game theory will force whoever does take an overly aggressive regulatory stance to have to undo their position. And I mean, come on, 2017 in the summer, I think it was in the summer of 2017 when the big announcement came out with China banning Bitcoin. Massive hit for that, month or whatever, and no impact whatsoever. Now, of course, China isn't anything like as if the United States would come out and say something like that, but I truly believe that the impact would be the exact same. The long game is that this thing's going to continue to prove that it's unstoppable.
Yeah, I'd like to add. I mean, that's exactly what gives me hope for the future as we see this kind of authoritarian world kind of coming in on us with technology. It seems the only thing that can really break that is competition, free market competition. So another country says, hey, you may be locked down living in a totalitarian nightmare in your country, but you can come free over here. And so we can go to that country now. In the past, we would have to go penniless. And I have friends whose families came from Iran or Afghanistan or South Africa and came penniless. They couldn't carry their gold, couldn't get their bank accounts out. They couldn't bring their real estate. But now we have a technology that can allow us to move our wealth. So that will speed up that competition. And that game theory, as Preston calls it, which is exactly right. And I think we'll start to see that accelerate pretty quickly. The other thing that I would just say, and I know this is kind of Swan's mission as well, is like to get as many people into Bitcoin as possible. And that's accelerating pretty fast, especially now with PayPal coming in, 350 million users, et cetera. And, we could have 1 billion users by next year. And if 1 billion people don't want Bitcoin to be illegal, Bitcoin ain't going to be illegal, right? That's 1 billion people. Yeah. So I think at some point, and this is a little bit off topic, but I see so many people online just kind of bowing down and, they're going to do this to us. They're going to ban this. They're going to ban that. And it's like, wait a minute. What? Like, if we don't want it to be illegal, it shouldn't. But ultimately, I believe in that free market kind of game theory, and I think it's going to prevail.
When you talk KYC, and a lot of people get very emotional around this topic, where I think the focus needs to be on the KYC front is on the corporate standpoint. All these tax laws are set up so that a corporation can stand up and act as if it has its own social security number, just like an individual person. That way that it has like all these risk reducing attributes from a legal standpoint as a company. So if you want to KYC something, KYC the companies that are sticking hundreds of millions of dollars on their balance sheet, right? And then on the individual level, focus on sales tax, right? They've got to adjust how they're looking at how they're going to generate revenues for the states by understanding the technology first, and then customizing it in a way that doesn't take individual people's rights, but it then focuses, it regulates, or it looks at the company specifically, right? Like, trust me, I've got Bitcoin on my company's balance sheet. I don't want higher taxes. That's not what I'm promoting here. But if they want to know every nitnoid thing about my company, sure, have at it. I don't care. On the individual level, if I've got a lot of Bitcoin on the individual level, well, sales tax me when I go out and buy a boat, or whenever I go buy a fancy car, or whenever I go buy a house or whatever. At that point of the sale is where that collection and that revenue needs to be generated. That's how they need to think.
Yeah, I agree. And to Brady's point earlier, what they'll use is terrorism. And so it's always some sort of fear that they can instill in us to try to get us to act. And we can see how wrong that is. Like the average person with their couple $1,000s is going to promote terrorism when we see banking reports where they're literally, laundering billions of dollars for cartels and terrorists. And so when you talk about, Preston, when you talk about the corporations, I mean, they're the ones with, like Sailor with $1 billion. I mean, maybe that needs to be scrutinized a little bit more, but the average person with their thousands of dollars or even tens or even hundreds of thousands of dollars, I mean, how much risk is that really going to be?
And just thinking of it in Pareto principle, 80% of the value is captured from 20% of the effort, right? So when you look at where's 20% of the value locked up around the world, man, you got to focus on the companies. Right? You got to focus on those companies in order to tap them for the revenue and to really fully know what they're doing with those coins. I don't know. I just look at it that from that vantage point, and I think, hey, give the individuals the freedom to go out and do things. And if they've got a lot of Bitcoin, they'll be spending a lot of Bitcoin, and that's where you collect your tax.
Both of your cameras seem to have messed up. I don't see either of you. I don't know if I'm the only one seeing that.
No, I'm seeing you, Mark.
Yeah, I think we're good. Sorry about that, Mark. That's unfortunate.
Okay.
Yeah, sorry about that. Go ahead.
What about if they do try to regulate the wallets and nodes, for example, and then only approved nodes can run transactions? Obviously, we've already seen Iran starting to use Bitcoin in a bunch of different ways through trade and mining, et cetera. And so they're obviously a blacklisted country. We saw that happen with Venezuela when they tried to do that petrodollar years ago. So then your node runs a transaction from a blacklisted company like Iran. And so now all of a sudden you kind of get this fractured database of nodes that run like whitelisted or blacklisted. I mean, have you guys thought about that and kind of how you see that navigating?
Yeah, I absolutely have. And I think that that's an outcome that regulators, or at least some regulators, might want to see happen. Because I think it would create two different markets, and this has been talked about by Bitcoiners for a long time, tainted coins, versus like fully KYC legal coins out there, and that could cause an issue. I think it's certainly a risk and something we need to watch out for. I think we can, there's, like you said, there's game theory out there that can help with this. Once we get a large enough minority, a vocal minority of people out there owning Bitcoin, we can, kind of fight against that idea. But it's going to be a hard one. I think it's going to be a hard one to fight against, because the politics of fear are extremely strong. And using the black market Bitcoins and really demonizing them from political pulpits could be a problem, and really raise, I think, public opinion against these black market Bitcoins. We have to kind of pull those into the regulated Bitcoin market. I think that could be a risk. I think there are ways that we can fight against it, even on the protocol level, by sort of baking in more privacy into the base layer. And the Lightning Network obviously is just built from the ground up much more privately, with onion routing kind of in the protocol itself, and basically making it hard or even impossible to tell, whether or not a coin is quote unquote tainted. Preston, you have any thoughts on that? Otherwise, we'll move on.
No, I just would describe it as, that's pretty much the system you have it today, but it's done with cash.
Exactly.
Versus money that runs through all of your traditional banks, the digital money that runs through your banks. I mean, it's the same exact thing we have today. The only change that's going to occur is with this, you're able to move the quote unquote cash a whole lot easier than you were historically, where you're trying to carry around $1 million of cash. It's a little bit more difficult. Yeah. If I was going to counter argue with myself, I think the traceability of this is way more difficult for a criminal, because think of, if you're running an FBI sting and you're putting $1 million into some drug money, you're keeping track of the serial number on each one of those pieces of cash that you're putting into this system, or this quandary or dilemma or whatever. With Bitcoin, it's tracked into perpetuity from the beginning of the Genesis block, right? So like, I would tell you that if the government's wanting to track things, why create these two different systems when their ability to go and analyze the blockchain is probably going to lead to way more understanding as to who is connected to who that's a bad actor.
It's a good point. Good point.
I don't know.
No, I agree with that. And, you know, the discussion about there's a lot of other reasons why it's important. It can be important or should be important, I think, to maintain transparency on the base layer. And that's certainly one of them. Another one is, you know, being able to audit the supply, which is a massive deal, is that's, you know, one of the core value propositions of Bitcoin is, you know, the fixed supply. So that's important. And, you know, moving privacy, you know, enhancing ways to move Bitcoin around the planet onto second layers, third layers is the way to go. And that's, you know, that's what core devs have decided to do. And I think that's the right choice. Let's move on to Brecky. We've got a screen share. First of all, we have this this chart that I was talking about, and I'm gonna have Brecky screen share because it wasn't working for me. Can you go over to the and go ahead and click on the chart so it comes up full screen? All right, so here's that chart I was talking about, and you can just see the massive dip, drop in Bitcoin available on exchanges, just precipitous drop. So I'm going to be keeping an eye on this stat. You can use Glassnode to generate charts like this. It's really easy. The free tier kind of like leaves off the most recent couple of months, but there's some really good analysts out there that are posting these kinds of charts on a regular basis. Cole Garner is one of them who posted this chart. And then I wanted to talk about this article. Actually, you know, it's a survey that is done by Spencer Bogart, Blockchain Capital, every so often. And they ran the survey and they just published the results December 2nd. They run the survey from October 7th through 9th in 2020 this year. And it's really interesting because it shows kind of three phases of, you know, moving through Bitcoin adoption. So there's the learning phase, which is like awareness, familiarity, perception, and then the conviction phase, conviction, preference rates, purchase propensity, and then the adoption phase, owners and users. So if we go to the fall 2020 highlights, which is kind of a grade box right there. Yeah, Bricky. So more than 1 in 3 Americans say they're likely to buy Bitcoin in the next 5 years, 34%. That includes 55% of the younger cohort, 18 to 34.
They better get in sooner than 5 years.
For real. I think that number is going to be going up. All of these will be going up, and they have since the last survey in 2018, and we'll take a look at that in just a minute. But that's fascinating to me. In terms of preference rates for younger generations among those age 18 to 34, 38% prefer to $1,000 of Bitcoin to $1,000 of government bonds, 35% $1,000 of Bitcoin to $1,000 stocks, 33% over real estate, and 31% over gold. So it's about a third across the board would prefer to own Bitcoin than other investment assets. And if we scroll down just a little bit more, Brecky, go through learning phase and then conviction phase, which is like the next section down. This is really fascinating. And we can maybe zoom in on this chart here. You can see, so fall 2020, the orange is the most recent survey. Spring 2019 is the blue, and gray is fall of 2017. You can just see this very steady increase in the conviction rates. You know, look at the blue lines going all the way up. The orange lines going up. So we have people moving into more of a conviction phase where they're thinking about it, they're talking about purchase propensity, they're convicted and moving into adoption phase more quickly. So this is a big increase and something definitely worth noting. And I thought maybe we could talk about these demographic trends. Especially like the younger folks, 18 to 34 cohort, like really showing strong preference for Bitcoin as an investment asset.
Brady, your first chart there where you were showing the exchange quantities of coins on the exchange going down, I think it helps confirm what we were talking about earlier, which is these institutional buyers are buying these, they're putting them into cold storage, and they're using it as an inflation hedge or protection based on all the debasement that's happening around the world with central banks. When I see that chart, that's what it tells me. Now, whether that's true or not, who knows? But that's how I'm interpreting that chart.
Yep.
They're not keeping it on the exchanges to trade it. They're just buying it and putting it on their balance sheet, and it's locked away.
Yep. I think that's going to be a massive trend. It's going to have very shocking effects on the price, because it's going to squeeze out that supply, and that can really drive up massive price runs that I think will really surprise and create FOMO. Whereas in the last cycle, the FOMO was really just for short-term fiat gains. I think this cycle, people will understand that the price is going up because the supply, available supply is being squeezed, and that's because people are hodling and big investors are hodling. So I better start doing that too, because this is just going, and it's not going to come back down much, and maybe we reach that escape velocity from that trend that Preston and I have been talking about on this show on his many appearances at this point.
You know what's nice, Brady, is there's no shortage of Bitcoin on these exchanges because of divisibility. There is no shortage of Bitcoin on these exchanges. There's plenty of Satoshis, right? There might not be whole coins.
Exactly. That's true. Yeah, it's just going to take you more and more dollars to get those sats.
Yep.
On the second part, let me jump in on the second part there.
Please do.
So I don't really pay too much attention to that. I think it's interesting that you're pulling up the stats, and I think everybody knows that they've heard of this. They've seen it, whether they're familiar with it or not. I don't know. I'm just looking at it from this lens. It went to 1,000 and it created some hoopla on CNBC, and everyone's like, "Oh, this is interesting. People are using magic internet money and they think it's real, right?" And then it crashed, and they're all like, "What a bunch of idiots," right? That was kind of the narrative. Then it surged up to 20,000, and people are like, "What in the world is this? How it's a double pump on tulips." Yeah. Sorry.
Yeah.
It's the double pump on tulips. And then it crashed, right? And then they got their second chest beat of what a bunch of idiots. Yeah. Right? These people are so dumb. It lost 80% of its value. What are they thinking, right? Now
we're thinking bye.
Now it's the third time's the charm, right? The third time after a decade of tulips. And now it's at 20,000. And like just this past week, the headline on CNBC is the dollar being dethroned with a picture of a Bitcoin with a crown on it. Okay. Yeah. On prime time CNBC, that's the headline. And that's what they were discussing. And not only were they discussing that, the guy who was on talking about it was a fixed income guy saying people were pulling money out of the negative yielding fixed income market to the tune of 16 or 18 trillion dollars, right?
I love it when Preston does that.
$1 trillion, 16 to 18, whatever it is now. You can't even keep track of it, right? It's total monopoly made up money anymore. That's where some of the flows are coming from. Okay. Yeah. So what happens when this goes to 50 or it goes to 100 or it goes higher than that? What in the world do we think the headlines are going to sound like?
Yeah.
I mean, and this it's not like it's happening for the first time or that it's 3 years old. We're in a totally different situation than we were historically. So we can pull up these charts with these numbers and everything, and I think that it's all great, and I think people are definitely hearing about it more, but nothing will capture somebody's attention more than, hey, there's some crazy people out there spending $100,000 on an imaginary coin, and it just keeps on happening. And it's not just random people, it's Larry Fink talking about it. Right. It's Stan Druckenmiller talking about it. Maybe Ray Dalio talking about it. Bill Miller talking about it. And the list just keeps going on and on and on. So that's what I'm looking at. And that's where when I'm looking at this, punching through 20 and continuing to go, the thing that I'm saying to myself, it's not just that the number is going up anymore. It's that the number is going up, and then behind that subject of the Bitcoin going up is a backdrop of sheer flipping chaos. Sheer chaos in the bond market. Central banks printing another $5 billion. I'm sorry, $5 trillion, right? The numbers are so big, they're like imaginary. We're just making them up, right? Because, we've got triple P loans we're going to hand out to everybody. And you know what? I want people, these businesses are hurting. They're hurting. They need cash flow. That cash flow is going to supply the liquidity into the new system. That's just how it's going to play out, right? These businesses need this, or they're going to go bankrupt. Evidently, every hedge fund on Wall Street also needs it. Get that, huh? That was a fascinating one. All these guys out there doing interviews on podcasts about how brilliant they are as capital allocators, and they're all taking out triple P loans, right?
Yeah.
That's your backdrop.
Yeah.
Your backdrop is a dumpster fire, along with Bitcoin going to 100,000.
Like Buffett said, right, when the tide goes out, you see who's swimming naked, and they all got exposed as swimming naked. To add on to Preston's point, there was also a report I was looking at, and I forget it was Citi or JP that put out, but they showed, all the gold flows, all the gold funds, the ETFs selling off and going into Bitcoin as well. You can see that like through Grayscale. So you can look in like Fidelity and look at some of those. So we see not just maybe some of that negative yielding bonds, as Preston pointed out, which is obviously a good use case, but also gold. And it's been an ongoing trend, right? So the name of the game, we have the boomers, the largest segment of the population, and they all need yield, right? They need income. And they're all retiring right now, and they're all trying to get yield, and all the pension funds that are adding up, and the Social Security, and they're all based off the 7% yield, and there's no yield, and everybody's just searching for yield. And at the same time, because of all the money printing, and they brought interest rates to zero or negative, and so if I'm a sovereign or a hedge fund, an institution, and I have hundreds of billions or whatever dollars, and I'm putting that into T-bills or bonds, and I'm earning zero, why would I be guaranteed to have no yield when I could just move it into gold? Or now, like I said, we're seeing gold funds move into Bitcoin, and so that's definitely accelerating it. And I think, obviously, COVID has accelerated all of this, accelerated almost every area of life, working from home, using Zoom, but even this trend as well. And it's almost like, the government, the Fed, whatever you want to call it, they really have no choice. People need liquidity, as Preston just pointed out. And so they have no choice. They have to print the money. But by doing this, they just continue to push the use case and kind of do the marketing for another alternative asset like Bitcoin. So they have no choice. They have to do it. But the more they do it, the more they make the case for it, and the more they're pushing people over into it. So it's all coming together perfectly.
I'm in the mood to rant, so I'm just going to rant.
Yeah,
so, please, man. So let's do it.
I see the central bank digital currencies come up in the chat, right? So riddle me this: how in the world are we going to issue these central bank digital currencies that are completely centrally controlled by every government around the world, and they're not going to debase those? Do we really think they're going to create yet another type of digital money that has blockchain in the title of it, and all of a sudden all of our fiscal appropriators are going to become responsible just by the snap of a finger and some magic dust, and we're clapping and we can fly now, right? Like, it's insane. It's totally mind-numbing insane for people to think that fiscal policy is going to just magically become responsible.
Never.
Right? Never. So they have to keep greasing the skids. I don't care if they call it a central bank digital currency. They call it whatever they've been calling it. They call it something else. The most trusted token ever in existence, right? They're going to debase it. And they're going to debase it because they have to debase it. Because we're at a point, we're at an end game where they have printed so much money and they have created so much deflation, price deflation, that the only thing they can do at this point is keep printing, because everyone's levered up to their eyeballs, right? There's no free cash flows for all these zombie companies that they keep propping up. And as long as that's the case, they're going to have to keep on printing. And if they have to keep on printing something that is completely decentralized will win as long as it has a fixed baseline of units to it. That's Bitcoin. So there's your central bank digital currency like debacle. And you're going to hear all these fancy people who have these academic PhDs and all this crap talk about how they're going to do all the governments are going to come together and they're going to have these central bank digital currencies and it's going to rock Bitcoin's world. They are so talking out their behind that it's insane.
Yeah. Yeah.
Yeah, and it's a story throughout history, right? I mean, the government figures out a way, the Roman Empire figures out a way to clip their coins and create more currency, and they go until they blow. Eventually, nobody accepts it anymore, and we've seen that story play out over and over and over again. And so, yeah, exactly. They're not going to wake up tomorrow and decide to live on a budget. They can't. They can't, and why would they? Why would they give up that power to create more money and enrich themselves? And of course, human nature won't allow that, and the need won't allow that as well. So they have no choice. They're going to keep going until they blow. At some point, and we don't know if that's a year or 50 years, but at some point, it all ends. It doesn't work anymore because it can't work. And they're going to have to figure something out, and then they'll start over again. They're going to try. But yeah, it's definitely Bitcoin that changes that cycle. And at least gives us that life raft where we can get off of that game that they're playing. But yeah, it's going to be interesting to see how hard they go.
Okay, so when I used to fly, this was called fire for effect. That means your rounds are hitting, and now it's time to really hit the target, right? So here's my final one, and this is for gold. How in the world do we think that we're going to step in and peg whatever made-up currency we want to make to gold, and that we're not going to debase it against that gold? Right? Name me a time in history when gold has actually supplied a peg that has lasted. Zero.
Yeah, not for very long.
That there's a reason we as the United States came off a gold standard in 1971. There's a reason why.
Yep.
But people, it's almost like gold bugs don't ever want to talk about that situation that we actually came off of a gold. Why did we come off a gold standard? Because we had to debase the currency and push it into circulation against the number of ounces we had in storage. If you think that that human in the loop is going to magically be stern and not allow that debasement to occur all of a sudden, even though it has never happened even once in human history, you are kidding yourself, right? This is the first time in history of mankind that a technology has been able to supply something decentralized that will peg the number of units, and there's no human that can step in and debase it. So for everyone out there with their gold, hey, it might do well. It might go up a couple percent. It might go up 20% in the next 3 years. I don't know. But I'm looking at it and I'm just like, I just don't get it. I don't get it. I'm just, maybe I'm out to lunch.
Well, and to your point, the problem with gold is because of its size and weight, it requires centralization. And so I like to say that centralization always leads to manipulation. And so we have to take the thing out of the hands of the government, right? That's what Hayek said. And so this, not only is it something outside the system, but because it's decentralized, nobody controls it. And because nobody controls it, nobody is able to manipulate it because, as you made the point, and I agree, someone's always going to do it.
Yeah.
If there's a way to debase it, to make more money, create money out of air, alchemy, they've been trying to do it forever. If there's a way to do it, they're going to do it. And so the only option is to go to something that nobody can control. Nobody has the ability, because human nature is always going to try to do that. And that's why the decentralized nature of Bitcoin is so revolutionary. Well, one of the many reasons why it's so revolutionary.
And, you know, it's kind of amazing how long the U.S. stayed on the gold standard after Bretton Woods. And the reason they were able to do this is because the fiscal appropriators at that point in time were being way more responsible than they are today. You have a buying habit cognitively, collectively on a macro scale that you didn't even, not even remotely had back then, right? Now, if we went on a gold standard now, it would be 1971 all over again, but it'd be like 3 months later.
Mm-hmm.
Because they have to debase that fast. So
and Even if they went to a gold standard, it would probably be debased right off the bat, right? It would probably be 20% or 40% gold backing. It wouldn't be 100%. They can't do it.
Our debasement just in the last 10 years alone is 15% annually, somewhere around in that number. You'd have to go back. If you're looking at the M2 growth rate and you do a CAGR on it over the last 10 years, you're at like 15% debasement annually, right? So that's what they're going to do if they go back and everyone sings Kumbaya, the G7 gets together and, you know, we do the SDR thing and we peg it to gold and we do all this stuff that all these neat writers are writing about. They're going to debase against that gold to the tune of at least 15% annually, probably higher than that at this point because of this depression that we're in. So you're 20% or more, right?
Way more, and we know that because they're telling us how much they're going to spend, right? So we have the Green New Deal, which is now whatever the Biden New Deal, and they're estimated to spend between 30 to 100 trillion.
Yeah, it's just getting warmed up. Yeah.
They're gonna print between 30 to 100 trillion. What? So I mean, that's way more debasement than we've ever seen before. So they're already forecasting what that's going to be, and that's only the United States. What about the rest of the world that they're going to try to do this through? So we're going to see debasement at a level that we can't even probably comprehend at this point.
So when you hear somebody say
because we don't have inflation. As long as we don't have inflation, guys.
We don't have quote unquote inflation according to the basket that they tell you to look into, right? So
exactly.
I mean, that's why whenever I hear these arguments, oh, we're going to go back on a gold standard, it is the biggest eye roll for me. And usually I just be quiet. I kind of sit back. I listen to it. I'm just getting so tired of hearing that argument because it's such a BS argument.
It's
so at some point though, they're going to try to go to some SDR, which doesn't make a difference because they're going to debase it anyway, right? So it doesn't make it sound money again. So it's the US dollar just bigger, whatever. And they're going to print their 30 to 100 trillion dollars, and they're going to blow up the currencies. And at some point,
they're going to try.
Well, they're going to try. I mean, they're going to print hundreds of trillions of dollars, and at some point, it's going to be like in Venezuela. There's paper currency everywhere, and nobody even picks it up because it's worthless. Exactly. So at some point, they've lost the trust, and I believe we're already losing massive trust. We can see that in the dollar right now. But at some point, people lose trust, and at some point, if they want to try to keep the game in check a little bit, they're going to have to do something to bring some trust back. And what do you think that would be? Or do you think it's game over? They don't get a second chance.
And this is what I was saying with Dan Tapiero on Twitter the other night. I said, hey man, it comes down to trust. So like, I can't tell you when trust becomes completely eroded and the global population flips the switch and says, all right, clearly this is something that I have to own some percentage of. Does that happen at 100,000? Does it happen at 150,000 a coin? I don't know. But there's going to come a point when people are saying, hey, I'm sitting on all these bonds that literally yield nothing, -%. Maybe I should take 5% of that. Maybe I should take 10% of it. Holy crap. Now the price is at 200,000. Maybe I need to take 20% and put it into this because I just might think that this currency thing, this fiat currency is failing. And that's the trust that Mark's talking about. It's just going to be completely eroded. And history has taught us when that happens, it happens all at once.
Exactly. So do you hyper-Bitcoinization?
So do you think that, I guess, so to play that out a little bit, so do you think that as the trust is being lost, I mean, it's happening super fast, people are starting to go, shoot, I need to get out. Enough people have gotten out where then once they've destroyed the currency, they don't get a second round. They don't get a way to try to reback it and try to restore trust before they ruin it again. People are already gone and there is no second chance?
I don't know.
What's interesting is I was looking at some charts. Obviously, the Dixie's been crashing. It seems to have maybe found a momentary floor. It looks like the Dixie and gold bounced at the same time today, which is kind of interesting to see them both going up. But it's been crashing pretty fast and pretty hard. It seems like the last time it really crashed this fast and hard was in 2016. And in 2016, it actually crashed it took twice the amount of time. So it's crashed in half the amount of time that it did in 2016. And what's interesting about 2016 is that there was like the Shanghai Accord. And so all the nations, I think it was the G7, they were not able to pay back their dollar denominated debt. And so they were going to have a sovereign crisis. And so they all agreed that the US would devalue so they could strengthen, they could pay back in their US denominated debt. So it was like a coordinated thing. But now we're seeing the same crash in half the amount of time, but there is no coordinated thing. As a matter of fact, the currencies are all coming down together. And that to me looks like a loss of trust, a big time trust, especially loss of trust in the US dollar. And in my opinion, not to get political here, but the election is a mess, and everybody knows there's something going on that you can't trust it. And just like people don't want to use the Chinese currency because you can't trust China, I think people are starting to lose trust in the US dollar pretty quickly, as I see in the charts anyway. I don't know if you have thoughts about that, Preston.
I think
I totally agree. I'm just going to insert this real quick, Preston.
Yeah.
Larry Fink, when he talked with Mark Carney, Council of Foreign Relations last week, said that Bitcoin can evolve into a global market, that it has a real impact on the US dollar, and it's making the need for the USD less relevant. So if that's not some signaling coming from, the CEO of the largest asset manager in the world talking to, the chairman of a couple central banks, right?
Canada and England. Trillions under management.
Yeah. So, I mean, there you go. Making the USD less relevant. He's choosing his words very carefully when he says that. And he was blown away by the fact that they put up 3 CNBC clips from one of the BlackRock's top traders was on CNBC. They put up 3 clips on their website, the BlackRock website. 3,000 views for a clip about monetary policy, 3,000 views about COVID's effect on the economy, 600,000 views on the video about Bitcoin. And he knows, like, what CEO really knows the hits on the videos they post on their website? He knew. He's watching. He's picking his words carefully. Sorry to interrupt. Go ahead, Preston.
Oh, so yeah, I'm with you 100%. I think when you're hearing the people that are talking about this in the manner that they're talking about it, their facial reactions, I mean, those two couldn't have ducked out of that conversation faster. It was like they had a puff of smoke with a cape that they threw in front of themselves as they ducked out of the back of the room when that topic came up. So, I mean, I'm looking at this and I'm looking at the backdrop. I'm looking at the opportunity cost that investors have to capture yield. Like Mark is saying, they're looking there for their entire lives. Somebody who's 60 years old, 70 years old, their entire lives, they were able to capture yield somewhere, someplace. And now they're served with a S&P 500 market cap that's yielding 2%, 3% at best, based on how it's priced to its earnings. And they're looking at a fixed income market that's less than 1% for the 10-year treasury. They're seeing the chaos in the streets globally. People know there's something wrong. And when they see something that's skyrocketing in value, like it's not even fathomable how much it's going up. And they know that it's challenging to become a replacement to currency and that it has a fixed peg. They're going to get it, and they're going to get it real fast.
Yeah.
Brady, I think your audio is going bad.
Yeah. Can you guys hear me?
Pretty bad.
Too bad. Keep talking. I'll try to fix this.
Preston, any thoughts on what I mentioned kind of about the dollar, the Dixie crashing pretty hard as opposed to kind of what we've seen in the past? And do you think that's related to trust being lost maybe right now, potentially from the election, or maybe that's kind of speeding it up between the money printing and all that together?
I don't know about that. I think that when you just look at the currencies, any major currency, the euro, the yen, the dollar, the yuan, whatever, they're all in a competition to devalue, and they're all incentivized to devalue because when they do, they capture, it's almost like a vacuum that sucks in work from overseas because the cost of labor, the cost of goods are cheaper. And so they're able to suck the fiat from other nations into their own local currencies or into their own domestic country. So I think it's more of a function of just competitive printing at this point that's causing the dynamic that we're seeing playing out. It's a winner takes all. And if you can print faster than the next person, well, then that's just all around good for you and your country.
Yeah. It looked like last week there was was it 680 billion was moved from M1 to M2?
Yeah.
That was I saw
Yeah, I'm not an expert on what the maneuver was there. I know that the M2 barely moved because of the way that they used the way that they were moving it around. But that was really fascinating to see how much the M1 jumped.
Yeah. Yeah, I'm not exactly sure what it means either, but Big stuff is happening. As you said, there's a whole lot of chaos happening behind the scenes over here.
I don't even know that they know. The people that are punching these numbers in the keyboards know what it is that they're doing.
Yeah.
Uh-oh, Brady. I see your mouth moving, but I don't hear the question.
Yeah, but to your point, I don't think they know either. And there's all types of unintended consequences, right? Everything has trade-offs. And so like it almost seems like they're kind of making these decisions like in a vacuum, but like not realizing like what happens. I was talking to someone earlier today and we were talking about some of the Green New Deal, renewable energy type stuff, and how the limitations on solar and wind and all of that and the trade-offs of going renewable. But I said, well, what about the $90 trillion they want to print? What about that? You got to take that into consideration too. Like, it's not just, these are big conversations.
Yeah. Yeah. It's wild. In the chat, somebody said that they're just glad they can see Brady's Obi-Wan Kenobi face.
Oh, you sound good.
Okay. All right. I switched mics. So
all right.
Sorry about that. Having all kinds of tech issues today, but I shall overcome them. This is fortunately I have two veterans on the show, and they can just take over for me. Okay. This has been a fantastic conversation, guys. We could go all night long. This has been bullish, and I'm right there with you guys. I'm all hyped up now. I'm going to go buy more Bitcoin. And it's happening. Like, it's happening. I am convinced. I wrote a thread about it. You can check it out. My pinned tweet at Citizen Bitcoin. This is what I think is happening. It's what I'm watching for this cycle. I think we're going to break all the models. Like Michael Saylor, said, people come in and, all your models are destroyed, completely devastated. And Bitcoin goes to the moon. That quote has been ringing in my ears for since it was said a couple months ago. I see this happening. I see more large investors holding. I see, the narratives, the attention, the marketing, as you pointed out on the last episode we were together with, Preston, the marketing, like, value that the price or number go up will bring in is going to be 10x what it was, 100x what it was in 2017. And the message is out there. This is, I think, going to be an absolutely insane year. Stack while you can. We're down here hanging out just below all-time high. I think once that breaks, the madness will be on. Yeah.
I'm a buyer. I'm a buyer right here. I came in 2015, 2016. I stacked pretty hard when it was at a good price. After that it crashed from 1,000, and I did pretty good. And I haven't really added much over the last couple of years. I started buying again this year at 10. And I bought some yesterday, and then I saw it crash this morning. I'm like, no, I don't care, right? I'm a buyer at these prices for the first time in a long time, and I'm bullish. How can you not be if you're paying attention?
I'm a buyer every month. I got free cash flows that my company's kicking off, and every month I just buy Bitcoin with it.
Boom. There you go. Swanish. That is very Swanish. All right, gentlemen. Really appreciate your time. This has been a ton of fun. Preston, this is your fourth or fifth time on the show. Really appreciate you making time for us on a regular basis. Mark, we'll have you back on. I'm sure you were on earlier as well. This has been great. Gents, I'm going to shill you guys for a minute. The Investors Podcast, bring it up in your podcast app if you don't yet. All right. Preston is he's got great shows. Talking to macro guys and gals and investors, talking finance. Bitcoin comes up on those shows, of course, but now he has a focused Bitcoin show that's dropping on Wednesdays. You got to check that out. The first episode with Breedlove was 2 hours of absolutely dense value. It's an episode that I will be sharing with family and friends who are really curious and just want to understand what's going on here from first principles. I did an episode with Breedlove, Money Time, Understanding Money and Time, from first principles. That was like a year and a half ago. So he's honed his game and just like really brought it on Preston's podcast. And then VJ Boyapati on the second episode was great. So you got to check those out. Mark Moss is at youtube.com/Mark Moss, just really blowing up on YouTube because he's pumping out great content. So go subscribe, watch his videos. Do the same here. We do this every Tuesday. Sometimes we, have an emergency show. We also do Swan Lounge on Fridays where we kind of more of a hangout vibe. That's a lot of fun. we're throwing out other stuff on this channel all the time. So subscribe. I think it's one of the best Bitcoin channels on YouTube. And I'm glad that we got established, here, because I really hope to help, like these guys put a lot better Bitcoin content out on the YouTube, just juggernaut. So yeah, thank you guys for your time. If you guys want to, shill anything else or just give us the last couple of words of inspiration, I'd love to hear it.
Yeah, thanks for having me and Mark. The episode that's coming out for this Wednesday for the Bitcoin show is with Jeff Booth, and it's going to be coming out actually in a couple hours. So appreciate you inviting me back on, Brady. This is always fun. Mark, we got to do something. We got to do some other conversations. I really enjoyed this with you, and yeah, thanks for having me.
Yeah, and same Brady. Thanks for having me back on as well. Preston, I've had Jeff on. He's an amazing guy to talk to, so I can't wait to listen to you guys' conversation. It's always cool to listen to the same people talk, same person talk, but from different people, because there's so many different conversations that come up. But yeah, Brady, thanks for having me back on. I love Swan. I love what Swan's doing. I've been sharing a lot of their stuff online, and I don't have any type of affiliation other than I just love the ethos of what you're trying to do and push Bitcoin adoption. So I'm definitely liking that, and I appreciate everybody else. Just what I would say to everybody just going out is that I think, everyone needs to just kind of continue to share this and just really push the mission. I mean, this is to change the world. I mean, this is our life draft, and it's a really big deal. It's not just about money. It's not just about a Wall Street game and what Microstrategy is doing on Wall Street. I mean, this is what's going to change the world. It's really a revolution. And so I just encourage people to really dig in to find out what it is, share it with other people, and just know that the future is not set. It's what we want it to be. And so it's up to each one of us. So I'll leave it with that.
Dropping the mic. Thanks so much, Mark. Brecky, we've got an insanely bullish episode here. I think it's only appropriate since we've been talking about Michael Saylor making news again that we go out, play us out with the Michael Saylor hype video. Let's do it.
First, I have a mega problem. And the mega problem is I have a lot of cash and I'm watching it melt away. Under a good year for the past decade, the monetary supply expands by 7 to 8%. That's my battery draining by 8% a year. That's a good year. And this is not a good year for us, right? This is a year where you can make the argument that the battery is going to drain 25%. What is the point of all this? What am I doing wrong? And of course, the answer is you can't hold cash. And so we bought $425 million. Bitcoin is the best security and the most liquid security invented in the history of the world. This is already won, right? It's won. It's been tested. Hundreds of thousands, if not millions, of counterparties can trade and trust each other with real-time certainty that collateral has not been double pledged, rehypothecated, and there's no fraud. It's digital gold. It's at least 100 times better than gold. I think it's probably
thousands of times better than gold.
Bitcoin is the first perfected digital monetary network in the history of the world. It's never been done before. It's dominating everything that competes with it. There's no reason to believe it won't be 10 times bigger, then 100 times bigger, then 1,000 times bigger. The dominant player is going to take everything. Who are these people that's selling this to me? And I feel sorry for them. What are you going to buy that's better than what you're selling to me? I just pity them. I don't want to hear that you've got a new idea and you're upset over transaction fees and you would like to implement smart contracts and you're going to change everything.
I don't want to hear that.
I want to hear that you're going to defend the network to the death against someone that's going to break it or compromise it in any way, shape, or form. What I want is to see a bunch of Bitcoiners that will lay down in front of the tank in Tiananmen Square, fight to the bitter death against every well-intentioned engineer that wants to tinker with the thing. You have to defend the network to the death. It's a beautiful thing, probably the most beautiful achievement in the history of the world. We've invented something extraordinary. Don't F with the